Hi, this is Brenda. This is a continuation of the discussion and demonstration of how to complete a master budget for a merchandising company. So far we have done the cash collection schedule and calculated the ending accounts receivable balance for June, which we'll use later on the budgeted balance sheet. And then we calculated cost of goods sold to use to figure out the purchasing schedule, and I showed you two alternatives for creating the purchasing schedule and figuring out the total amount of merchandise that's going to be purchased during a period. So our next budget schedule, also relating to the purchasing information, is going to be our cash disbursement schedule. We want to find out, now that we know how much we're going to buy, when we're going to pay for it. So we need to go down in our problem to letter E, where it tells us about when inventory purchases are paid for. Our assumption says for this company that 25% of a month's inventory is paid in the same month of purchase, and the rest is going to be paid in the month following. And then it refers us to the accounts payable at March 31. Well, if 75% of any month's purchases are paid in the month following, then it makes sense that whatever was purchased in March but is not going to be paid till April would be in our accounts payable. Remember from the first video that we started out with a beginning balance sheet, and we can see here that the accounts payable at the end of March was $36,500. That's that 75% of March purchases, and we're going to put that in our April column because that's when we plan to pay it. Alright, so let's bring our assumption back up so we remember what it is. Let's think about April now. We know what we plan to buy in April, $50,540 of merchandise. So we're going to take that amount and we're going to multiply it by 25% in the April column. And we're going to multiply the same number by 75% in the May column. We're going to do the same thing for May. We're going to take May purchases times 25% in the May column, and we're going to take May's purchases times 75% in the June column. And then for June, we're going to take the June purchases times 25%, and the 75% is going to be paid in July. But let's think about where that's going to help us in our current budget period. Anything that we have incurred as a cost in this month but are not going to pay till a later month is going to be in accounts payable. So while we're working on this disbursement schedule, even though we don't need the accounts payable right now, it's useful to calculate it at this point so we can refer back and have it already done when we get to the budgeted balance sheet. So I'm going to go ahead and take care of that. I'm going to first do some summing here. Get our totals for the rows and the columns. Remember, just like with all of the other schedules, the column amount is the amount that you're going to be using to carry forward to the next budget or schedule. Now, thinking about that June AP again, remember it's the amount that was purchased in June that's not going to get paid for until July, and that's 75% according to our assumption. Alright, we've got our cash paid for inventory purchases ready to go, and we've got our June accounts payable. This concludes the demonstration of doing a cash disbursement schedule. If you have other questions, please contact your instructor, and be sure to watch the other videos so you have a good understanding of how to create those schedules as well.